What if I told you there was one ETF that's done 120% over the last 5 years, crushing the S&P 500, and many people are talking about it because it deals with small caps. And today we're going to be talking about one particular ETF, and this is a small caps value ETF called AVUV. Hey guys, my name is Steve and I run the Frugal Expat website where we try to help people to save more and invest better. And today we are talking about AVUV. AVUV is the Advantage Small Cap Value ETF and it got brought onto market in 2019. And today we're going to talk about 4 reasons why AVUV is the best small caps ETF to buy and hold for the long term. Let's first talk about why small caps are essential for people's portfolios or even essential in people's economies. You know, we always talk about large caps. We talk about the S&P 500. Those are large cap companies. We talk about the Mag 7 like Apple, Microsoft, Nvidia. We talk about those big companies that people know the names of. But what about those small cap companies? What about the ones that maybe are rising up in the ranks and you may not even know about it? With possibility of interest rates being cut, we can see that small caps could soar and skyrocket in the near future. And that could happen this month. That could happen in the near future. That could happen in 2026. But if you don't know which small cap ETF to buy and hold for the long term, you may not know about why some people's portfolios are going crazy while yours is still stuck on those 10, 12, 15% of the year because you're just holding an S&P 500 ETF. Now, there's nothing wrong with that, but adding maybe a little bit of small caps could maybe do some good for your portfolio. These small cap companies allow you to have some diversification. They have some great growth into them. They have some great value, and when interest rates are cut, these could soar and be a great part of your portfolio. Now, not everybody needs small cap companies or small cap ETFs because there are some great funds out there that allow you to have some small caps in them. VGT has small cap tech. VTI has some small cap companies within it. SEHB throws in some small caps. There are some great companies and great ETFs that are including small caps, but if you just wanted a low percentage just dedicated to that small cap value, AVUV should be that ETF to buy and hold for the long term. Now let's throw out some statistics for you guys about some AVUV. So first of all, AVUV is the Advantage Small Cap Value ETF. It is a actively managed ETF. It's got an expense ratio of 0.25%, which means it costs about $25 for every $10,000 invested. It's got about $17 billion of assets under management. It's been around since 2019, so it's been around for about almost 6 years, and it's done pretty well in the long term. Since its inception, it's averaged about 14% per year, and for the last 5 years, it's had an average annual growth of about 19.18%. So this is a great ETF to buy and hold for the long term. Now, it goes against some of the popular ETFs like VBR, IJS, or IWN. And these are some popular value small cap ETFs that you could buy and hold, but with AVUV, you are beating these companies with your performance. I mean, the performance in the last 5 years has been 120%, which is beating the S&P 500 as well. So it's a great little ETF that you could buy and hold for the long term. Now let's talk about 4 reasons AVUV crushes the other small cap ETFs. Now, some numbers that we can take a look at is AVUV with a total return, including all those dividends, it has been doing about 140% compared to VBR, which is doing 99%, and IJS and IWN, which is done about a little bit over 80%. Now that's total return. Price return, AVUV has done about 120% in that 5-year period. Now that's amazing news. We're looking at ETF that is averaging over the last 5 years about 19.18%, and that is beating most of these other small cap ETFs. So that's one reason why AVUV should be a better one compared to all the others. Second reason is AVUV has more value compared to all the others. So AVUV has about 58% of their portfolio into those small cap value companies, while VBR, supposed to be a small cap value ETF from Vanguard, only has about 31%. So AVUV has more value companies than all the others on this list. Number 3 reason is AVUV has a pretty good cost. I mean, the active cost is 0.25%, which is only a few basis points more than QQQ, which is a growth fund that tracks the Nasdaq 100. So the cost is not really that high compared to a lot of different actively managed funds, and it's kind of similar to a lot of passively managed funds. So it's got a pretty good cost for someone that's having professionals create a portfolio, finding those small cap value companies. Now, AVUV is finding those better quality companies. Now, this is not just a ETF finding the cheapest companies out there and saying it's quality and valued. Now, this is a company looking for strong fundamentals to find the best companies out there to add to the portfolio. And so with this ETF, you are getting not only a good portion of some great small caps, you're getting a good ETF that's got some of the best in the small cap arena. Now, how can you add AVUV to your portfolio? So if you have a good portfolio core of maybe a VOO, you have a growth in like a QQQ or QQQM, and maybe a dividend ETF like a FDVV or an SCHD or a DGRO, you can add AVUV as a small cap portion. Because with those others, you don't really have much small caps. So you can add anywhere between 5 or 10%, or even if you had a VTI only has about 12% in its mid caps and small caps, but adding maybe a 5 to 10% of AVUV could be added to your portfolio to create more of a sustainable portfolio that captures all parts of the economy and all parts of what the US market is. I mean, if you believe in the US market, then you shouldn't just have the top 500 companies. You should have other companies that are part of the US market that could spring up. Palantir 2 or 3 years ago was a small company, and now it's one of the largest companies, and it makes it part of those top 10 companies, top 20 companies in most of the ETFs that you could be buying and holding. So if you just had a small cap ETF that holds some of those companies, as they grow, this will grow as well. And one of the cool things is with interest cuts possibly coming in the near future, this could skyrocket AVUV because small companies need cheaper money. They need cheaper money to grow. And with interest rates being cut, it allows these small companies to have some more money that has a small interest, and then they can grow their business to become bigger and better and to continue to grow this US economy for the future. We all want cheaper money so then companies can grow, and that is a good part about possibility of interest rates coming down. Now, will interest rates come down? I don't know. I am not someone that's looking into the future. I do not have a crystal ball, so I don't know what's going to happen in September. I don't know what's going to happen in 2026. I don't even know if Jerome Powell's going to be staying longer. But those are some things that you could be thinking about, and maybe if you think at some point that interest rates could be cut, you could start adding some AVUV today and allow that to skyrocket in the future. Now, there's always risk when we're looking at different investments, and some of the risk with AVUV is economic uncertainty. When the economy does crashes, small cap companies get crushed the hardest. Bigger companies are a little bit more stable, and that's why they continue to stay around for year after year after year. Another thing is there's high volatility. Now, with the market going up and down, if there's good news in the market, you're going to see small caps go up a lot faster. But if the market goes down, you're going to see small caps go down like crazy. I've seen this in my portfolio this year alone. I have some AVUV. I've seen days where it's gone up 3 to 4%, and I've seen days where it's gone down like 1 to 2%. And so if you cannot handle the volatility, AVUV may not be something to add to your portfolio. And of course, there's also the active managed risk. You know, there are professionals managing this portfolio, but managers may not always do the best. Peter Lynch once ran the biggest and best fund, the Magellan Fund of the Fidelity. Now, he was doing about 27% average, and so that was great, but a lot of people jumped in later on, and the returns kind of fell, and so then they weren't getting that 27%. So managers come and go. Some managers stay for a long time. Some have a good 5-10 years. So that could be a risk to AVUV. So here's the bottom line. AVUV looks like a great place to put some money in if you wanted to have some small cap exposure. It's got a good management team. They're looking at good companies that have a strong foundation. If the rates get cut, it's going to explode. If the valuations are doing pretty good, it's going to explode. And it's just a good possible play for possibly the end of 2025 and maybe 2026. Could AVUV be a part of your portfolio? Yes. Could it not? Probably. I mean, it depends on how you want to have your portfolio. I have a little bit of AVUV because I think small caps could do well, but in the long run, we just don't know. So continue to follow your own strategy, continue to add what you already own. Like if it's just one ETF, VTI is a great one that has small caps in it. If you wanted tech, VGT, it's got some small cap tech companies in it. So just follow your strategy, do what you do, and continue to buy and hold for the long term. All right, I'll see you guys in the next video, but leave a comment. Do you own any small caps? What are some ETFs that you think are probably underutilized? All right, I'll see you guys in our next video. You guys take care and talk to you later.